there are only a few companies that can truly change your life. For example, in just 3.5 months, we made 300% profit from one of these 3 companies, 166% from the second, and 168% from the third. What's more exciting is that I openly share all of these with you here on this channel, and I'll continue to do so. If you're someone who prefers to miss out on such opportunities and would rather keep your portfolio sitting at -100% or -200%, then by all means, don't subscribe to my channel, and don't watch this video till the end. By the way, in this video, I'm going to talk to you about a company whose stock is currently trading at just $1.24, and yet analysts believe it could rise to $14 within the next 12 months. That's a potential gain of 1,030%. I promise, every minute you miss from this video will cost you 100 regrets. So let's get started. The company in question is MIRA Pharmaceuticals. MIRA is a pre-revenue, clinical-stage pharmaceutical company. It has 2 key neuroscience-based drug development programs, Ketamir-2 and MIRA-55. Ketamir-2 is a novel oral analog of ketamine, being investigated for the treatment of neuropathic pain, treatment-resistant depression, TRD, major depressive disorder with suicidal ideation, and PTSD. MIRA-55, on the other hand, is a patented synthetic cannabinoid, designed to treat anxiety and early-stage dementia symptoms. Both Ketamir-2 and MIRA-55 are classified as non-controlled substances by the DEA in the United States. That means they won't be subject to the same strict legal and regulatory hurdles typically seen with similar compounds. MIRA's stock has shown high volatility in recent years. After peaking at $5 in 2024, it fell significantly and is now trading around $1.24 per share as of June 2025. Over the past 52 weeks, the stock's low was 51 cents and the high was $5.01, so that's a price swing of nearly plus 78%. Given the stock's low trading volume, price fluctuations can be quite intense for investors. For instance, according to stock analysis, the 1-year average price growth estimate for MIRA is around 1,030%, with a 12-month target of approximately $14. However, sharp pullbacks are also possible, and the stock is currently trading well below its peak, fluctuating between $1.20 to $1.30 on Nasdaq. The company has yet to generate any sales revenue. In other words, income is currently zero. In 2023, its operating expenses totaled about $8.53 million, mostly driven by R&D and administrative costs. Interest expenses rose significantly as well, reaching around $3.456 million. Overall, MIRA ended 2023 with a net loss of $11.98 million, compared to a $7.06 million loss in 2022. By the end of 2023, MIRA had $4.603 million in cash, up from just $0.351 million in 2022, mainly due to new stock issuances and borrowed capital. According to its financial statements, MIRA generated about $4.53 million in operating cash flow and raised around $8.78 million from financing activities in 2023. The company posted similar results at the end of 2024. In the first quarter of 2024, the net loss stood at $1.78 million. Cash levels continued to decline, dropping from $2.83 million at the end of 2024 to $1.21 million by March 2025. This highlights the need for additional capital as expenses continue to exceed income. MIRA's main focus is Ketamir-2, which is still in the preclinical stage. It is an orally administered drug aimed at neurological disorders. The company has stated that it plans to submit an IND investigational new drug application to the FDA by the end of 2024. Human trials for this drug are just beginning. Phase 1 trials are currently underway in Israel, with no safety issues reported so far. Ketamir-2 has already demonstrated strong efficacy in animal models. For example, promising results were seen in a diabetic neuropathy model. In 2024, it passed the FDA-required neurotoxicity test, which showed no signs of brain damage. MIRA aims to launch Phase 2 clinical trials for Ketamir-2 by the end of 2025. On the other hand, the MIRA-55 program is also in the preclinical stage. MIRA-55 is a synthetic molecule designed to combine the benefits of THC and CBD while minimizing side effects. The company believes this drug could prevent or reduce symptoms of anxiety, early-stage Alzheimer's, and overall cognitive decline. Clinical trials for MIRA-55 haven't started started yet, but the company stated that applications for first-in-human testing were expected to be completed in early 2025. Both drugs are categorized by the DEA as non-controlled, meaning no additional legal or administrative restrictions are expected for their development in the U.S. Analyst opinions on MIRA vary. Platforms like Stock Analysis have given it a strong buy rating with a target price of $14. However, firms like Kingwood Capital are more cautious. In their summer 2025 report, they noted that MIRA posted a $1.78 million net loss in Q1, or 11 cents per share, which aligned with expectations. The report also highlights the company's dwindling cash reserves and the urgent need for fresh funding. MIRA is planning to acquire another company, SKNY Pharma, which could bring in an additional $5 million in cash. However, this would dilute existing shareholders by over 100%, as it would involve issuing a large number of new shares. Since the details of this acquisition haven't been finalized, Kingwood analysts currently maintain a hold rating on MIRA. Overall, market participants see strong technological potential in the company, but also emphasize risks such as low liquidity, dilution, and the need for market alignment. MIRA's target markets, especially in areas like obesity and cognitive disorders, are massive and extremely competitive. According to the company's 10-K filing, Ketamir-2 holds strong potential in the U.S. depression and TRD treatment markets, with optimistic revenue forecasts of up to $3 billion annually, or $7.8 billion in a best-case scenario. The report also projects that by 2036, the number of patients in the U.S. eligible for Ketamir-2 treatment could reach 200,000. Meanwhile, MIRA-55 targets the intersection of anxiety, cognitive decline, and neuropathic pain markets. Competition is fierce here as well, but the company believes MIRA-55 could offer a safer synthetic alternative to existing THC and CBD options. MIRA plans to commercialize both products through licensing or sale deals after Phase 2 trials. Analysts believe this strategy could bring in enough capital, though such deals likely won't occur before 2027. In short, if clinical results are positive, MIRA has high investment potential, but it will require significant time and resources to establish its place in the market. As a small, early-stage biotech company, MIRA carries considerable risk. Even the company itself warns that its pre-revenue status and accumulated losses raise doubts about its ability to continue operating. For example, by the end of 2023, its accumulated deficit exceeded $21.3 million. Without new funding, there's a real risk that it may lose its going concern status after 2024. Given its current cash position, MIRA will need fresh investment to cover expenses beyond December 2024. As noted in the 10-K, if funding can't be secured, the company may have to delay or scale back research and development plans, worsening its financial condition even further. Moreover, the planned merger with SKNY adds further uncertainty, as full financial details haven't been disclosed and the long-term impact on shareholder equity remains unclear. With shares trading this low, MIRA also risks violating Nasdaq's $1 minimum bid rule, potentially triggering a reverse stock split. These are expected challenges for a company like MIRA. If it fails to stabilize financially, these risks could seriously impact its investment value. As stated in the 10-K, without new funding, the company may not be able to operate for the next 12 months. Ultimately, as a high-burn, pre-revenue firm, any returns from investing in MIRA will depend on the success of its drug trials. To sum it up, analyzing this company reminded me of the phrase, all or nothing. Because the risk here is insanely high, but if these drugs are approved, the price could rise just as insanely. Right now, the stock is cheap, so taking a small position might make sense if you want to balance risk and reward. So, could this be the company that changes your life?